U.S. chain store sales fell short of the International Council of Shopping Centers forecast, but my next guest says there's good news for retail. This year, Wachs started Cross-Ledge Investments to exploit her vast knowledge of retail. She's followed consumer-oriented stocks since 1992 when she joined Delaware Investments. Her new fund, by the way, is up 11.7% since it was launched at the beginning of September. Congratulations, Lori, on the new fund.
Thank you.
Thanks for joining us on this Friday. Well, looking at yesterday's data, we saw that Neiman Marcus, Saks, Bloomingdale's all seem to have done well. Does this mean that luxury retail are on the comeback?
It certainly was a tale of two pretty different consumers yesterday, and we haven't seen something like that in some time, where the high-end consumers really did well across the board. Neiman's was up 12%, Saks up 8%, Bloomingdale's was cited as a strong area over at Macy's, and they were contending against this same warm weather that we were seeing at some of the more moderate income department stores, and they really had a very difficult month where Kohl's and JCPenney's were down about 2% each. So it does seem to be that the higher income consumer is getting more of this wealth effect from a strong stock market that we've been seeing, and they are much more likely to go out and shop and buy discretionary items than we've seen in some time. Okay, and then on the flip side, we have a chart up here right now. These were the worst performers on the chain store sales data that came out yesterday. We're seeing companies like JCPenney down 1.9% month over month in terms of same-store sales. Kohl's as well. Now, would you put these in the category? I don't think anyone would say that they are luxury retail stocks. Why aren't we seeing spending in those stores? Well, their customer traditionally tends to buy closer to need, and given that we had an unseasonably warm month, we weren't all that surprised, although they came in a little bit less than anticipated, that the customer didn't really have the reason. So if you look at a company like Kohl's, they were really held back by these higher ticket sweaters and outerwear that they just weren't able to sell to their consumer.
Lori, now, it used to be everyone waited until Black Friday. Used to be. I don't know when that used to be, maybe a decade ago. These days, you know, the holiday shopping starts pretty much as soon as I think it gets a little chilly out, which would be right now. Which stores are really poised to take advantage of holiday sales this year?
I would continue to think that it's those companies that cater to the higher income consumer that has more discretionary cash flow. So if you look at a company like Coach, they just reported their comps are up over 8%, and they said that their customers' intent to purchase is higher than it's been in over 2 years. We also like companies like Urban Outfitters that, again, caters. They're one of the best specialty retailers out there, and their consumer tends to have a little bit extra cash flow when they get the fashion right.
You know what, Lori, when you're talking about these figures, are you looking at the population that's actually buying these? Are these U.S.-based stores for these companies? Or because we have talked, you know, just earlier in the month, we were talking about how in China, a lot of the Chinese population was driving up sales of luxury items. Are we seeing that amongst Americans as well?
Interesting that you mentioned that, because especially as it relates to Coach, that's one of their biggest growth areas now. China's about 3% of their overall business, and that's doubled over the past year. They're growing their square footage there by 60%, and their same-store sales are running high into the double-digit territory. So for the bigger companies that have some sort of global presence, certainly China is going to play a big part in their growth as we go out the next few years. All right.
Now, I'm interested in finding out, how does this figure into your strategy? I mean, we just mentioned this in the introduction. You started a new fund doing very well, up, what, 11.7%, almost 12% since September, short period of time. But what are your top picks at the moment?
Coach is actually the biggest weighting in our fund at the moment. We also own a number of other retailers that are kind of playing on this more discretionary spend that we're looking at for this Christmas. So again, we own Lululemon, Urban Outfitters, Dick's Sporting Goods.
All right, thank you. Lori Wachs, founding partner of Cross-Ledge Investments. I got to tell you, on the buying side, I like Lululemon myself. All right, thanks for joining us this Friday, Lori.